But, this week is really not about all the internals. At least the next 2 days are going to be all about Trump and what it would mean for the world and India in particular. Given that the dollar is also going to react sharply. Let's welcome on board Adrian Mowat and find out what he's making of the markets and the entire setup right now. Adrian, hi, good morning. Good to have you on the show. And I guess, Adrian, all eyes on Trump swearing in and what Regime 2.0 is going to really mean for the world. What do you think his narrative is going to be on tariffs, and whether the pre-election narrative or rhetoric is something that he's going to continue and actually make into a policy?
The indications are that he may have up to 100 executive orders that he signs, whether that's today or over the next couple of days. But the team has put a lot of work in place so that they hit the ground running. And so I think we're going to have a fair amount of clarity and a lot of stuff to process over the next 48 hours. Now, it is interesting, the tariff question, because there are divided opinions within the Trump administration. You know, the likes of Navarro, who are advocating just putting on tariffs across all imports, to others who are taking it much more as a negotiating tactic. So I think we will be very focused on the tariff numbers and how broad-based they are. The market will be pleasantly relieved if it's the idea that we'll threaten tariffs, but we're not imposing them. I think it could get an unpleasant shock if Peter Navarro gets his way and you get across-the-board tariffs on all imports into the US.
But, Adrian, just picking up from there, wanted to understand, because, here back home, it's all about China versus India and what Trump 2.0 is going to really mean. You think there will continue to be pressure on China? And is there a case where there could be limited positives for India from that?
Well, look, I think there's been a broad trend of people de-risking supply chains, which has been moving the supply chain away from China. And that started under the first Trump administration. And India has benefited from that. You could look at maybe specific examples such as Apple, that has significantly increased its sourcing from India. So I don't really see a change in trend. I think an environment of significant increase in tariffs is just sort of net negative. It imposes a cost on the US consumer. It disrupts the global supply chain. And I don't see any sort of significant net winners from that. I think also we'll see the US maybe becoming a lot more stronger in policing the true source of imports. So countries like Vietnam that might have benefited from people moving capacity from China to Vietnam, but effectively importing a lot from China and processing in Vietnam, those types of situations being under more pressure.
How do you see the Trump policy impacting the dollar strength? Because some experts do believe that the kind of move that we have seen in dollar index in the recent while, that may be in for some moderation. Help us with your understanding and expectations on the same.
Yeah, so I think the way you could argue that this substantial dollar strength comes to an end is if the type of policies that Trump enacts with all these executive orders, if they are disruptive, bigger tariff increases, disruptive for business, you could see a slowdown in US economic activity, and that would be the reason why the dollar might begin to weaken. But for now, superficially, the Trump policies probably continue to sit in the strong dollar camp. We've also got to think beyond just looking at the US when talking about currencies. European economic growth still remains relatively sluggish. The ECB continues to ease interest rates. And so a weak euro looks like an ongoing trend. We might possibly even get to parity. China is still fighting significant deflationary forces, and part of that fight is to allow the renminbi to continue to weaken. And then within Japan, yes, there's some speculation that the BOJ might raise rates and you could see a little bit of recovery in the yen, but I still think the yen is structurally weak. So we still want to live in a world of a strong dollar. You can see that pretty strongly if you look at the current exchange rate with the Indian rupee, right?
Well, certainly, rupee has been weakening, Adrian, and one of the major factors that has been impacting the FIS outflows that we are seeing. But that's not just the case for India. Even the emerging markets are seen to be a bit under pressure of late. What is your expectation that when can the investors once again can get back and eye the emerging markets, and once this dust settles around the expectations on the tariff hikes, and maybe when we get a bit of a clear picture on Trump policy, do you believe that anytime soon the emerging markets can have a good time?
I think emerging markets would need to see an end to the dollar strength, which is possibly something you're seeing mid-year, but for now that looks less likely. We have seen, some reasonable policy moves from the Chinese. I think that will continue. The large tech stocks in China are actually generating reasonable earnings growth and are aggressively buying back stock and paying dividends. So there's a good shareholder value story in place. Elsewhere in EM, it's a bit of a struggle to sort of find the positive stories. There are issues in Latin America. Clearly Mexico is at the crosshairs of all the trade disputes. Brazil's got a serious fiscal problem, which is resulting in very high real interest rates and a relatively weak real. And in the ASEAN region, growth rates still remain quite low. And then if we look at your market, unfortunately, India's earnings results are proving basically disappointing. You were talking a bit about emphasis and the tech space. Look at the top line growth for the tech names in India. They are very, very sluggish. They're low single digits. That's not really what people are after when they're looking for, expensive growth stocks. So I think India's also sitting in a period where investors have been disappointed by the results, and they're disappointed by results in a market that's expensive and has also got a weakening currency.
Oh, yeah, absolutely. Lots on our plate. But Adrian, good to have you on the show. Thank you so much for your time today.
If you like this video, then like, share and subscribe to ET Now.